So welcome.
Hi.
Tell us what you're doing here.
I don't know what I'm doing here. Talking about insurance.
There we go. We're insurance. Talking about home insurance.
Home insurance specifically. That's right.
Okay, so let's get started off. Like, why is home insurance so important?
Well, it protects your home. Your home is your biggest asset. You need to protect it, and insurance does that.
Okay. So how's this differ? Like, I don't have a house. I don't have a home. I've heard of home insurance before.
Do you live in an
apartment?
Home? Apartment?
Yeah.
Well, apartments have renter's insurance. Even if you don't own it, you can get renter's insurance.
Yeah.
Yeah.
Okay, so I have that.
Right.
Right. So how does a home insurance differ from the other type of insurance over there? Because like you can't like wreck a house, or I guess you can.
Yeah, you can.
Or a house does get wrecked, but you
Totally.
like how does that work?
Well, I mean, a house can get wrecked in all sorts of ways, right? It can catch on fire.
Gotcha.
It could flood, right?
Okay.
Like a pipe can burst. I had a customer one time that his water heater it was a condo, and his water heater just bottomed out and flooded the 5 units below him. Whoa. And his insurance had to cover all the damage to those units and his own because it was his water heater.
Gotcha.
Yeah, so home insurance, there's all sorts of different things that can happen. I mean, your house can get robbed, so your personal belongings could get stolen.
So what's covered in this home insurance?
I mean,
what is it like a full? Is this a full coverage?
Full package.
Wow.
Yeah.
Okay.
And every home policy.
It's exciting.
Yeah. Every home policy needs a different type of insurance. So, like if you own a home, you're living in the home, or let's just use you for example, because you don't own the home you live in, but you're renting it.
Yeah.
So renter's insurance doesn't cover the home itself because you aren't the owner. You don't have the vested interest. Okay. But all of your personal belongings, if there was a fire and all your personal belongings were stolen and you didn't have renter's insurance, you wouldn't have money to replace your things. So renter's insurance covers your personal belongings in your home. And the person's home who owns the home, they won't pay for you to go stay in an apartment or a hotel while the home's being replaced, but your renter's insurance will cover that. So it's even important to have home insurance for a renter. But for a homeowner, let's say the house catches on fire. Unfortunately, no one wants that. But, I mean, that's a real thing right now, right? Wildfires are crazy.
Oh, wow. Yeah, right.
I mean, when the wildfires are, whipping through.
Takes out a whole community.
Yeah.
Boom.
Yeah, so homeowners insurance covers fire, and wildfires are included. So it covers the reconstruction of the home itself. It covers all the personal belongings in it. So the dwelling coverage covers the home itself. Personal property coverage replaces all their things, so they could go buy a new TV, they could go buy new furniture.
Wow.
Loss of use coverage will pay for them to go stay in a hotel or rent another house while their home's being rebuilt. So homeowners insurance has all sorts of benefits.
Gotcha. Now, that's cool. I didn't ever know how in depth it got, and this is what's great about this.
Yeah, it's like about it. 'Cause I feel like I'm always excited about it.
Yeah.
So, yeah.
And then now, is this mandatory? Like if I just show up and be like, oh, cool, I'm gonna buy this house. Poof, we got a house. Do I have to get home insurance, or is it something that we need, or is it if just I have a loan on the house, or if I bought it cash, there's different stipulations that either I need to have it or don't need to have it? How does that work? Yeah. Or if, say, now we're in because here's another scenario, if we were just buying like a level in a high rise or something like that.
Right.
Is that mandatory because you have to cover up and down if you fuck something up really bad?
Right.
Sorry for the F-bombs, but you get what I'm saying.
Yeah. No, it's,
so there's a couple different scenarios. Maybe it's applicable and not?
Yeah, that's a very great question. So homeowners insurance is not mandatory if you buy it cash. If you just go buy a house cash, then it's your business if you want to protect it or not. Okay. But if you have a mortgage, then the lender will require that you have homeowners insurance. And different lenders require different things, but it will be part of your contract that you have to maintain homeowners insurance. And in fact, if you don't get it, they'll force place it on you, meaning they will buy home insurance for you and then make you pay for it in your mortgage. They'll start including it in your mortgage payment.
Oh, gotcha. Cool.
And typically when insurance is force placed by like a mortgage company, it's way more expensive.
Oh, yeah?
Yeah, so they'll make you.
You have to do it regardless. It's
if you have a mortgage.
You've mortgaged it out. Okay, cool.
If you have like a condo or something like that, usually the HOA has, so let's say you have a condo complex. The HOA covers, the HOA insurance covers the structure, but the condo unit owner is responsible to insure the inside. So So like basically the HOA insurance would leave an empty box of a condo, and then HO6 insurance, which is walls in coverage, would cover the inside of the condo.
Gotcha.
So condo owners typically have two insurances, one the HOA and then the HO6 that covers their interior walls, the rebuild of their inside, and all their personal belongings.
Okay, is that part of HOA fees? Is that what's built in, or is this I have to pay HOA fees and I have to pay the insurance?
Yes, you're paying part of the HOA insurance in your HOA fees.
Ah, gotcha.
And then you have to go get HO6 insurance on your own. A lender would require it.
Okay, cool.
Yeah.
Right on.
I love how excited you are. Yeah. It's so much fun.
So how big do these get? How big are these insurance policies getting? Like it covers the whole thing. So if I went and bought a $2 million, $4 million mansion or whatever, I guess that'd be a house around here, but
yeah.
I'm from Missouri.
Right. Oh.
So we go,
yeah.
You know what I mean? Like,
well, that's a great point.
But like here, if we go, okay, cool. Is it covering like big ticket items? How big does your insurance policies go up?
Yeah. So I love that you brought up Missouri, because the main part of a home insurance policy is the dwelling coverage. And the dwelling coverage covers the reconstruction value of the house. So oftentimes people think that the dwelling coverage is supposed to match their loan amount, but that's not true.
Oh,
because
gotcha.
a loan amount includes land value.
Acreage. Yeah.
Right.
Sure.
So like if you took a house and plucked it off the land in Carlsbad and moved it to Missouri, the house in Carlsbad is like $2 million, and then the house in Missouri is probably like $500,000, right? Yeah. So your dwelling coverage doesn't include the land value. So if you have a $2 million home in Carlsbad, but it would only cost $500,000 to rebuild, your dwelling coverage is the $500,000, not the $2 million.
Wow. Okay.
Yeah.
That's cool. Because you're not covering. This is where it gets into our landscaping.
Right.
I have another $1 million in my landscaping over here, and I got all the pipes in the ground. I got the aerated, I got a heated
the
pool.
hot tub, the barbecue.
Right. So,
for all your parties.
And I'm not technically dwelling there.
Right.
Is that covered?
No. So the dwelling coverage covers the structure of the home itself, but then you can add separate structure coverage, which covers anything that's part of the property that's not attached to the house itself. Oh, cool. So your concrete, your landscaping, your pool, your barbecue, your fences, all that is part of separate structure coverage. So let's say you have $500,000 in dwelling coverage, like we were talking before. Typically, separate structure coverage is 10%. So you'd have like $50,000 in separate structure coverage.
Cool.
But you could increase that. I mean, in Carlsbad, we love our backyards, right? We live outside here. We're so lucky. So oftentimes, you want to increase your separate structure coverage to make sure your backyard's properly covered.
Is locked in also.
Yeah.
So because when we say dwelling, this place we live, if we have an external unit, does that still, like if there's a garage?
Right.
Because people, a lot of fires can happen in there, accidents can happen in the garage very easily. Like, is that different? Is this another policy that you're adding on?
Well,
or is that included with the structure?
If it's not attached, if you have a garage that's detached, it's technically covered under the separate structure coverage, like we just talked about.
Cool.
So if you have like a pool house or a garage or a granny flat, you'd want to increase your separate structure coverage to make sure that is covered.
Awesome.
So yeah. And there's different types of homeowners insurance, because if you buy a home and you're living in it, then you need homeowners insurance for owner-occupied residents, right? Mm-hmm. But there's a totally separate policy if you're like a landlord. You're buying it as a rental unit.
Oh, gotcha.
Because
okay.
You probably don't have your stuff in there. Your renters probably have their stuff. So landlord policies are totally different. Instead of having loss of use, so it wouldn't pay for the person to go get a hotel, like I said before, but it would cover the loss of rents, because that's what a landlord is.
Oh, really?
Yeah.
They'll pay the rent for you.
Right.
What?
Yeah.
Oh, wow.
Because that's what you're worried about, right? If you have a house and it burns down and your renters move out and aren't paying you rent.
Right, and there's your cash flows just went down,
Yeah, so a landlord policy will pay those loss of rents while it's being rebuilt.
Okay.
Yeah, so there are different homeowners policies have different coverages.
So let's go through that. How many different policies, the big ones, like what is there? So there's going to be one for the homeowner.
Right.
There's going to be one for
the landlord. Right. And there's different types of policies for landlords, because there's ones that cover replacement value, and then there's less expensive policies that cover actual cash value. So replacement value means they'll pay for you to get all the construction material to replace it. But if you have an older home and maybe you're not super concerned about having brand new items in it, then you can get an actual cash value policy. Those are cheaper because they offer less coverage. They're going to give you depreciated
They're just cashing you
value.
out. They're just cashing.
Yeah, they're gonna give you depreciated value for the rebuild of the home.
Okay,
so it's just a little less.
And then one step further so we got the home, we have the landlord, and then is like the investor side of things. That's a kind of a different thing, but the same.
Totally, yeah. So it is different because insurance is all about risk and what is the risk of that home, right? What are you worried about? Mm-hmm. So if you are an investor, let's say you're buying a home to flip. So you're buying a home, it's vacant, you're doing construction on it, and there's no one living in there, so there's no one in there watching it, right? Mm-hmm. So for example, I had a customer one time that was doing a flip and a painter left a oil rag in the house at night and it spontaneously combusted and set the house on fire.
Wow.
Well, that's a risk for a vacant home that's under construction. So that needs a vacant home policy to cover those type of risks.
Gotcha.
Yeah.
Now, if that would have started a forest fire and it would have taken out the whole neighborhood,
right?
Who's reliable for that?
Oh, geez, Louise. I mean, homeowners policies have liability, which cover things like, let's say, instead of saying the whole forest fire, let's just say your house fire caught your neighbor's house on fire.
Okay.
Your liability coverage could kick in to also pay for the damage that your fire did to the neighbor's house. I mean, they probably have homeowners insurance themselves.
Oh, gotcha.
But liability has limits. So 100,000 is the minimum, and you can go as high as $1 million. Then you could put umbrellas on top of you to go to like 10 million. So just because you have the coverage doesn't mean that there's not a maximum, So it's important when you're looking at homeowners to not only say like, okay, how much do I need, but what other stuff do I own? What could somebody sue me for? Because you want your liability to be high if you're high net worth.
Okay. Yeah. I was just thinking, well, what happens? Like if it gets like really out of control. Yeah. Because then this gives people the bigger picture and the idea of like, oh wow, things could go really bad, and we're still protected.
Right.
Because most people don't think really bad scenarios. Like, oh yeah, hey, we messed up some drywall or some ceiling or structural thing or whatever, right? But it's like, well, let's talk about something ridiculous,
Yeah, and I think homeowners insurance is geared more towards those big things that are going to ruin your life, right? The little things, insurance policies typically have a deductible. Okay. And the higher the deductible, the lower the price. So that's a good trick because when you're buying homeowners insurance, especially when you're buying a new house, oftentimes you want to get your insurance premium down low to help your debt to income ratio. Okay. So you could just increase your deductible. So let's say you have a homeowner's policy with $1,000 deductible and it's a little out of your price range. You could increase your deductible to $2,500 and it'll lower your price. So you're getting all the same coverages with a little bit higher deductible and it'll lower your price.
Gotcha.
Yeah. And so what a deductible is like, let's say in the scenario where your fence blows over, let's say that fence problem is only going to cost you $500, but you have $1,000 deductible. Mm-hmm. Well, it's not covered under your insurance until it hits your deductible.
Oh, gotcha.
Yeah.
Okay.
So insurance
then you just have to take care of it yourself.
Right. You just take care of it yourself.
Okay.
Which little things like that. I feel like homeowners policies are more for the big things. The fires and the pipe burst and.
Well, yeah. And are you only here in Carlsbad, North County?
No, well, I'm licensed in all of California, and I grew up in the Bay Area, so I have clients from San Francisco to San Diego. Yeah,
awesome. Yeah, because then you're up there too. You're dealing with more extreme weathers. You know what I mean? Because you can boop, there goes your roof.
Right.
Where'd it go?
Yeah.
You know what I mean? Like,
yeah. Or like, if there, like it was really windy last week, the winds were crazy. Yeah. What if a wind blows a tree branch off and it slams into your roof? Yeah. That's covered under home insurance.
That happens. Yeah. That happens.
It does.
Happens a lot.
Crazy things happen. I've been doing this for almost 14 years now. I've heard a lot of crazy stories. Yeah.
Let's hear one of these. We like to call them here success stories.
Success stories.
Let's hear about a seller success. We want some insurance success stories.
I mean, I had a customer call me one time. She had a huge tree. Actually, I think it was a tree I can't remember if it was her tree or the neighbor's tree. I think it was hers because we covered it. I don't know if you've seen the commercials where they're like, we covered it.
So that matters. If your tree falls on your house, it's your problem. If your neighbor trees falls on your house,
it's their liability.
Because it was their tree.
Right.
Interesting.
It was their tree.
Okay,
yeah.
cool.
So she called me and she was like, Jill, I'm stuck in my house. And I was like, what? And she's like, I'm stuck in my house. Like there's a huge tree that fell and it's blocking my doorway. And like, I can't get out of my house. It's like it crashed her car and it was covering her doorway. And so I was like, okay, I'll send someone over. We called someone over. Her car insurance covered her car because your homeowner's insurance does not cover your car. And people ask me that.
Anybody's home, even in your neighbor's home insurance.
Well, if a tree falls on your neighbor's car, then yes, your home insurance will cover that liability.
I'm with you.
But people ask me like if they have a fancy car in their garage, or I guess you could have it doesn't have to be fancy, right?
Right.
But they wonder if
collector.
yeah, totally. Yeah, their Porsches in their garage or whatever. They ask if their homeowner's insurance will cover that, like if there's a fire, but no. Typically homeowner's insurance exclude cars. The car insurance covers the car, so it's a separate claim. If it's your car.
That's cool. Yeah, I'm with you. So how bad was this claim?
Oh, it was bad. I mean, yeah, because somebody had to come clear the tree out. I mean, it got complicated. Her car insurance, her house had to be repaired. Some of her landscape. I feel like it was probably over a $50,000 claim. The one where
and she just paid a Jeter.
She pays her deductible
or whatever her
That's
deductible was.
Yeah,
and then boom, it was all taken care of.
I think she had a $2,500 deductible. Yeah.
How stress free does that feel?
Yeah.
Wouldn't that be nice?
I know.
You know what I mean?
Insurance is one of those things that people think like, oh, I don't want to pay for my insurance. But like when you need it, you are so glad that you paid for it and that you have a good company that's going to take care of you. Because sometimes, some of the cheaper companies are cheap for a reason,
Yeah.
So, and it's good. I'm an agent, so I think it's good to have an agent to have these conversations and say, this is why you need this coverage. This is why you need that coverage. This is what your deductible means, So, yeah.
Yeah, and you're there to protect your client anyways, and it's not like you're like, oh, well, I'm going to get him for an extra couple $100 if I give him the terrorist package. Like, you know what I mean? It's like, that's not what you're trying to do.
Yeah.
You're just trying to get them hooked up so they have the best policy possible for them to
so
move
they're
forward.
Protected. And everybody's different, Some people need more protection than others, or some people might have really nice art or really nice jewelry, right?
Oh,
they need to add those on as floaters so they're fully covered, whereas other people who might not be into art.
So homeowners insurance covers everything in your home.
Right. Covers
so I didn't even realize I don't have jewelry. So I wasn't thinking like, we have a $1 million watch or your collection of them.
Right.
A lot of people collect a lot of cool stuff around here.
Right.
Don't get me wrong.
Oh, yeah, for sure.
You know what I mean? You get a painting on the wall, you get some artwork, you get something fancy going on. It's like you can easily turn in, okay, cool. You got your $2 million mansion or house here.
Right.
But,
it's just a house here. You have to get above $5 million to be a mansion. No,
So you got your $5 million mansion here, and then you put things on the wall.
Right.
And now it's a $10 million mansion.
Right.
Like, boom, just like that.
Yeah.
So, okay.
And sometimes big ticket items like art or jewelry, they have a limitation on how much they'll cover on the home policy. There's like there's always a fine print, right?
Gotcha.
So the fine print might say that, we only cover jewelry up to $2,500, right? But you can add that on and say, well, my ring's worth like $100,000 and I need it fully covered. So you could submit an appraisal into your insurance company and they'll cover it. It'll cost a little more money to add it, but they'll cover it for the full value.
That's cool.
And
so you can tally up everything in your house and actually get a policy on it.
And take a little video.
Versus because would there be right? Is there a difference between getting... So that would be like you're the homeowner insuring these things.
Yeah.
Is it possible for that person to get just a separate policy for this ring or for this piece of artwork?
They probably could through their jeweler. But one of the benefits to adding it to your homeowner's insurance is it's covered for things like theft, or even jewelry floaters are sometimes covered for mysterious disappearance. You like the sound of that one?
Whoa. Mysteriously disappearance.
Yeah.
Oh my gosh.
So your personal belongings in your home, they're not only covered in your home. So like I had a customer that was on vacation.
Wait. Say that again. Say this again. This is important. I really like this.
Your personal property insurance, your personal belonging insurance is not only covered when it's inside the home. It's covered wherever it is. So if your car gets broken into and you have your work bag.
Oh, my camera gear gets stolen.
Right.
Yeah.
Then your car insurance doesn't cover that. Your car insurance doesn't cover personal belongings. Your home insurance covers your personal belongings.
Wow.
Even if they're not in your home. So I had a customer recently that was on vacation. They took a road trip. It was a long road trip. They had everything in their car. And they ran into a grocery store to get groceries and their car was broken into. Everything was stolen. That's covered under their home insurance. The personal belongings are.
Wow, that's cool.
Yeah.
Yeah.
And same with, renter's insurance too. Like your stuff.
Oh, so all this is all covered.
Right. Well, not if you're using it for business. It has to be personal.
This is personal.
Yeah.
This is only for the Instagram.
Just got personal.
It's just got personal, right? Let's start off with the big one that everybody's talking about right now,
all right,
in the whole entire world.
Let's do it.
We have
Hit me with that.
we have a global pandemic.
We do?
National emergency.
I haven't heard of that.
Amber alerts are going off on my
I
phone
know.
telling me I have to stay inside
I know.
forever and I can never come out and talk
know.
to people for the rest of the time.
Right. That's why we're doing this from our own individual homes, and you're just cutting us in. It looks like we're
This is
together,
live
but
streaming.
we're not.
Yeah, this is live.
We're
Yeah,
not
yeah,
breaking
This
any
is
rules.
a Zoom call.
Definitely is a Zoom call. It's like the most realistic Zoom call
Yeah,
I've
it's a
ever
Zoom
been
call.
on.
No big deal. So, COVID. How does that? What's the deal? Because I heard you guys kind of talking about this at the beginning, and in my mind, I'm trying to link how would homeowners insurance like overlap with a COVID situation or COVID scenario?
Right.
Right. What would it cover?
Does it apply?
Yeah, does it apply? And if it were to apply,
How would it work?
how would it work?
Right.
Okay.
So, super tough answer as an insurance agent, because insurance is all based on, what could happen, what's in the policy, and COVID didn't exist. So there's no verbiage from an insurance lingo. There's no verbiage in the policy that covers or doesn't cover COVID because it just hasn't been an issue until now. Anything close to the verbiage is a virus or bacteria, which are typically exclusions. So typically excluding meaning not covered, Yeah. But there's going to have to be something done by insurance companies and Department of Insurance to address this, because COVID is real. And, unfortunately, here we are in December, and it wasn't only there for 2 weeks, right? So this might be something we deal with. So the short answer is it's just not covered right now. There's just, it's not. I think if it were to be covered probably more as like an Airbnb owner is probably where people would want it covered most. So if there's a government shutdown and your Airbnb customers can't, come pay.
Oh, yeah.
And you lose that income, then can your insurance kick in and cover your loss, your loss of rents? Remember we talked about a little earlier. So your loss of income.
Okay.
And right now it just doesn't. And I guess only time will tell what insurance companies and Department of Insurance do about it.
Okay.
But that's... Yeah.
So that's for if I was a landlord,
right,
or a short-term rental, relied on that as part of my business, and then we could say, okay, we had insurance and it covers this.
Right.
What if I'm a homeowner in a house and now I can't pay my mortgage?
Oh, right.
Is my home insurance going to help me cover my mortgage until the whole pandemic and government shutdown has been lifted?
Right. Yeah.
You know what I mean? Or what are they putting into place with that? I have heard over 30% of mortgages in America are not being paid right now. So does home insurance cover this, or is this a banking thing you have to work out with your bank, or are they going to have some grants or programs to help keep people in their house?
Right.
Like
we hope.
Anti-foreclosure laws or however they're pushing these things forward. Like, what's the deal?
So, because someone's going to have to do something. It's crazy.
Something's going to happen.
You can't just shut us down, say we can't work, and then can't pay our mortgage. And it's crazy. So, with home insurance doesn't cover your mortgage payments. Home insurance covers the rebuild of your house if a claim happens, if a event happens that you need your house rebuilt. So homeowners insurance isn't protecting your mortgage payments. That's something that you work out with your lender and your mortgage. But I mean, it's a great question. I guess, like, again, time will tell to see what happens, where insurance goes with this type of thing.
Isn't that interesting? It'll cover rent payments,
right,
but it won't cover mortgage payments.
Well, it doesn't.
Because the landlord still has to make their mortgage payments.
Right. Yeah.
Okay.
So, I mean, right now it doesn't cover either, Sure. I'm just saying in the future, these are all good things that I wanted to mention something about Airbnbs, because there's a difference between landlord insurance, having insurance as a landlord who has a permanent renter in there that signs a lease, and having an Airbnb. Because Airbnbs are more like bed and breakfast type of short-term rentals, right? Yeah. And so typically homeowners insurance or landlord insurance excludes those short-term rentals. Landlord insurance, the home insurance policies for landlords are intended for landlords with permanent renters. So
those are 6 year,
right,
6 months or a year, or longer term leases. Okay.
So there are other policies that you can get for short-term rentals, and you want to make sure if you're renting out your house as an Airbnb that you have the proper insurance. Because worst thing could happen, you think you have one insurance, and then, a claim gets denied because you didn't have the proper insurance. So
that's why it's so important to work with you to realize what really needs to happen here.
Totally.
Okay.
Exactly. I think so.
Yeah. That's awesome. Yeah. Now let's get because this hopefully should be like right on that same point, would be when we're talking a landlord scenario, is that going to be per house, or how big can we scale up with that? Per unit, per complex? Now we're dealing with 200, 300, 400 units on a property,
right?
And we're doing like an insurance that size. Like, where does that come into play, or does that like get turned over to like commercial?
Yeah, you're exactly right.
Oh,
yeah.
So fill us in on how does that work?
So if you have let's say you have a duplex, you could usually do one home policy for a duplex. You could usually, so you either have business insurance, is what you're talking about, like commercial business insurance.
Okay.
Commercial and business insurance are the same term in insurance lingo. They're used different. People act as though they're different, but technically business and commercial insurance are the same thing.
Oh, okay.
Yeah. Same with hazard insurance and home insurance. A lot of mortgage or lenders will call it hazard insurance, but it's really home insurance. It's the same thing. Okay. Home insurance covers hazards. So, So typically you can do a personal home policy for 4 units. For 4 units. Above 4 units, it usually turns into a commercial or business policy.
Okay, and then those are just different.
Right, there's different. A whole different thing. Yeah, because is it 10 units in the same building? How much do you need to insure the building for, or is it multiple buildings?
And then are they dealing with vacancies too? Like does insurance just magically pay because I can't fill up my units?
Yeah, so there's all different types of policies, and I mean, insurance isn't one size fits all. Sure. That's why you want to make sure that you have the right policy for your needs.
Yeah, there we go.
Yeah.
So and then we just did, what's the difference between lenders calling hazard insurance and homeowner insurance? That's kind of what we just did. The difference between dwelling policy, homeowner policy, and condo, which is going to be DP3, HO3, and HO6.
Right. So we touched on this earlier.
Did we? Did we want to what did we say?
Yeah. So a homeowner's policy is reconstruction value and someone living in the home that they own. A dwelling policy is more of an actual cash value, the one that pays depreciated value versus reconstruction value. And HO6 is the condo policy that covers the box, the inside of the box.
Okay.
Walls in is what it's called in lender mortgage real estate world.
Awesome.
Yeah.
So we did go through those.
Yeah, I know. I'm telling you, you went through these questions without realizing. It was awesome.
And we said something. I have a nice backyard. How's that covered?
Right. So separate structures.
We
talked about it. Yeah.
Awesome. What's the difference between market value, reconstruction value, and how much dwelling coverage do you need for your house?
We talked about it. Remember Carlsbad versus Wisconsin?
Oh, yeah, Missouri.
Missouri,
Yeah,
sorry.
same
Sorry,
thing.
same thing. You said it.
It's not here.
Right?
Anything that's
We're
not
in
here.
our own California
Yeah,
bubble.
if you're
Everywhere
not-
else is just there.
Somewhere else. That's how it's funny like that.
Yeah.
I'm like, okay. Oh, you're east of the 5? Where's that?
Yeah, exactly. Yeah, anything like north of San Clemente is like LA, right? And then after
you got
turns-
Orange County, North County.
Yeah.
That's all cool.
Yeah. That's all the
we can go
same.
down to La Jolla and then we
Yeah.
stop.
Yeah. After you stop putting "thes" in front of our freeways, then you're not from San Diego anymore.
Yeah. Taking the 5.
We've got the 5,
The
the
5.
101.
Okay. Here we go.
Oh, here we go.
We haven't done this one.
I
I
like
think.
your face.
If I own a rental property, right? What's the best way to insure that? So I got a rental property here. I got a rental property there. What's the best way for me to insure these properties?
I guess it depends on. Well, I don't know. That's a really hard question because it depends. I
wrote the question down.
I did. I wrote it down. Oh, best way to.
Okay, yeah.
We touched on that question that I
Okay.
was thinking of. We touched on it earlier because the best way to insure a rental property is with a landlord policy, not a regular homeowner's policy. That's
Okay.
kind of what I was thinking.
Cool.
Getting at.
Yep.
And multiple rentals just depends on how many you have. If
Okay.
they're on the same parcel,
Gotcha.
Yeah.
Now you got me thinking here. Because now watch this though. And would this, I guess it would be per individual, because say I had a portfolio of rentals, right?
Right.
Now, do I have one rental policy to cover them all?
Right. You can.
Oh, you can?
Yeah.
Gotcha.
But it also
You
depends.
hear what I'm saying? Yeah.
Are they under the same ownership? Meaning you as a individual might own multiple properties, right?
Yeah.
But you might own them with different investors. They might be an LLC, so they might be in different LLCs to protect your liability. So if you have one home insured under, ABC LLC, and you have another one insured under XYZ LLC, those have to have 2 separate policies because they're technically different owners.
Okay.
Even though you as an individual have a vested ownership, they're different owners, so they need different policies.
Gotcha.
They're protected differently.
Yeah, but to say everyone here at K Capital owned 100 different individual houses and had a portfolio of performing assets, would that
Right.
all be able to be covered by one
Yeah.
policy?
Yeah.
Or do I need...
Yeah, there are policies that you can put them all under one policy.
Okay.
But there are negatives and positives to doing that. So remember we talked about liability, like if somebody sues you. So let's say you have like 100 homes and they're all on one policy.
Yeah.
And you have, $5 million in liability on that one policy. That's it. That policy maxes out at $5 million in liability. Whereas if you did them on different individual policies, then maybe they can each have their own $5 million.
Gotcha.
So there's, it just, everyone is different. That's why you need a advisor.
Cool. Yeah, right, exactly. Especially when you're dealing with something like that.
I'm going to keep letting you know that. You need me.
Ooh, here we go. Yeah, you need me. So do I need you for full coverage or liability? What's the difference between these? What do we got going on
full
here?
coverage and liability. Did I write that down?
Well, you said, what is liability insurance? Why do I need to have it and how much?
Oh.
So I was just trying to, what do we got going on here?
So full
how
coverage.
do you even get involved with the liability?
Yeah. Full coverage and liability is typically an auto insurance term.
Oh.
Right. And I don't think full coverage should be used anyways, just I know we're not talking about auto insurance, but full coverage is a false way to make people feel warm and fuzzy when it's not. There's really no such thing as full coverage. Every policy has its own limits, its own deductibles, you need to be more educated about it. Liability means that you're covering the other people's car that you hit, not your own car. So if you have liability only, it just means you're not paying to protect your own car. You're only paying to protect the people that you hit.
Okay.
That's auto.
Yeah.
Liability on a home is, like I said, if you have somebody who comes and trips and falls, even if they weren't invited onto your home.
Even if they're trespassing.
Even if they're trespassing.
So we have some trespassers come onto my property.
And
they sprain their leg.
Yeah, they can
I'm
sue
trouble.
you.
What?
Well, remember, we're in California, so anyone can be sued for anything at any time.
See, in Missouri.
And you have to pay lawyers to protect you, even if you're innocent, right?
Wow.
So your liability insurance kicks in, so your insurance company pays for the lawyers to defend you.
Okay.
Whereas if you don't have enough liability insurance, you have to pay the lawyers yourself. So liability is a huge part of a home policy.
Okay.
Yeah.
And that is, so you have the home policy, then you have liability on top of that?
Yeah.
Is it plugged in there somewhere?
Home policies have coverages in them, and liability is one of the coverages. It's typically included in homeowners insurance. It's typically included in landlord, but the dwelling policy, which is the actual cash value policy, dwelling policies are more like a la carte insurance policies.
Okay.
They're very, very basic, inexpensive insurance policies that pretty much have dwelling coverage on, and then you have to add in anything else.
Okay.
So sometimes they seem too cheap and too good to be true, and we know that sometimes when something seems too good to be true, it is.
Yeah.
You know. So
or they could come and build onto their package, right? And custom build it and get what they want.
Yeah, it definitely has its place in the insurance world, but you got to be really careful with them because they have a lot of exclusions. Yeah.
Gotcha.
I have a story about a liability policy. I had
Let's hear it.
I mean, liability covers things that you wouldn't think of because liability kicks in when you get sued, and you wouldn't think, like, if your friend came over, you wouldn't think they would sue you. But I had a customer who their friend went to dislodge the ice from the blender. You know, the blender got stuck, and they stuck their hand in there.
Well,
and they dislodged the ice with the tip of their finger, you know? And they didn't have health insurance, and so they sued my customer so that their homeowners kicked in and defended them and ended up paying out their medical bills. Wow. So, I mean, you know, you don't think that your friends would sue you, but sometimes when money and medical bills are involved, sometimes you're, you know.
Well, was it well, here's the thing, too. Did it have to be a combative thing?
Right.
A combative, it's like, I'm suing you because I cut my finger, or is it like, hey, this is the best way for us to move forward as friends. It's like, hey, I really got hurt at your house. And I was like, no, it's not your fault. It was like my fault. How about we just make a couple claims on this so it does get taken care of? It's really no big deal.
Right.
Like, do people get sued like that now? Can it be like this nice thing?
Anything can happen because
in
California.
I feel like I cut my finger. It's like, okay, we do need to get it fixed. We need to get paid for.
Yeah.
Right. But it's like, how'd that go with that relationship between those friends?
They remained friends.
Okay.
Yeah.
That's nice. Yeah. That's a success story.
Yeah.
Yeah.
And if you think about it, let's say you have a swimming pool is a huge liability.
Oh, yikes. Right? People can drown just like that.
Right.
Yeah.
And especially if you have kids around, and so you never know what happens if a kid got hurt in your swimming pool, what a grieving parent could do. So liability is really important to cover yourself because, you know, your home can be liened as an asset in a lawsuit. So you could think like, oh, I don't have anything, but you do if you own a home. Your home is a huge asset that can be liened in a lawsuit. So the liability is important to have.
Wow. So even now, would that cover pets as well?
Oh, right. So pets aren't, like if a pet gets sick or something like that, then no, your homeowner's insurance doesn't cover it. Yeah. But what if you have a dog that bites your neighbor, right? That's a big one.
Oh.
That's a big liability claim because it's your dog.
Yeah.
Right?
You guys put dogs down here in California?
Do we put dogs down?
For biting people?
I think they can.
Okay.
Yeah.
Gotcha.
I think it's complicated in California. I think they get taken first. And if your dog bites somebody and gets, I don't know what it's called, confiscated or
repoed or taken away.
Put in like the dog jail.
Okay.
There is, I don't know what it's called. Yeah, but let's go with the pound.
5-0, come get your dog. Yeah.
So a lot of times in order for that owner to get the dog out, they need to bring evidence of insurance that they have liability insurance for that dog, or they can put that dog down. So sometimes there's stipulations that if your dog bites somebody, you have to get insurance for your dog to get your dog back.
And is there a severity on these bites? Is there a difference between a nip and then someone just getting like half an arm ripped off?
I think it depends on the medical bills of the person who the dog bit, right? Because typically they're suing for the medical bills or loss of income or God knows what. I mean, there's some crazy dogs out there. And it's important to know that homeowners policies don't always cover all dog breeds. Because dog bite claims became a huge deal in the insurance industry. And so some insurance carriers started excluding certain breeds.
Wow.
So you might think that your liability insurance covers your dog, but if it's like a pit bull or a typically they're excluded. And then you can go get a separate policy just for the dog.
Wow.
Yeah.
Gotcha.
Crazy.
That's good to know.
Yeah.
There's a lot of dogs here.
Totally. And if your dog bites someone, I mean, typically most people want their dog back.
Yeah.
So insurance can come into play there.
Cool.
Yeah, pretty cool.
Interesting. Yeah, the dogs, man. I didn't know about that.
I've never heard of a cat bite claim, though. I've never heard of that. A cat bite claim.
Yeah.
Yeah, usually
Cats
those are...
not running around attacking people too much while they're out on a walk. Yeah. Let's see. Let's go. How do I cover my personal belongings?
Yeah,
kind of
we
went over
went
some
through that.
personal belongings.
Totally.
We did?
Yeah,
Okay.
we touched it. I'm telling you touched them all.
Do I need insurance if I
even
have
need that list.
HOA? Does my insurance cover dog bites?
Yeah.
Oh, that's cool. It does. I didn't even know it was said there.
I want to touch on the
brought it up.
HOA. One more thing about
Airbnb
the HOA.
insurance. Okay. So do I need insurance if I have HOA?
Right.
What's the deal with that? How does this all work?
Right. So there's a difference between having an HOA for a condo, which we discussed a little bit earlier, right?
Ooh.
They insure the structure, you insure your box.
Okay.
But if you're in a home, like a home insurance, not insurance, a homeowner's like complex with an HOA that maintain the greens. Let's say an HOA, let's say there's a community pool.
Yeah.
Okay. So let's say that a child gets hurt in a community pool that's in the HOA. The HOA insurance is what kicks in to cover those common grounds. So typically a homeowner, let's say the HOA has a claim, the HOA insurance has a $10,000 deductible. They will assess the homeowners for that deductible. So if there's 10 homes, they'll take their $10,000 deductible and assess the homeowner. So you can add loss assessment coverage to your home policy that will kick in to pay your deductible if a covered claim happens.
Gotcha.
Yeah, so there is
because in that scenario, let's just like paint the picture for somebody. Because we had 15 homes that's being covered in the whole HOA deal, and then this guy way over, you don't even know him.
Right.
Something happens.
Right.
Yeah, he's running the back trail from one house to the next or whatever. You know how they usually do something in a little park or something.
And there's like an overgrown branch or something.
They snap a leg.
Right.
Boom. Now you got to pay a jeter to have this guy fixed because he can't jump a tree.
Yeah, and he sues the HOA.
Boom.
But since you're part
Now
of
I'm
the
on the
HOA
hook.
community, you're responsible for that HOA deductible or any other assessment. There's verbiage in your HOA contract that holds you liable even though you may not know it, because there's always a fine print. So you can add loss assessment coverage that pays your portion if it's a covered claim for the HOA. Yeah.
That's cool.
Yeah, and that loss assessment coverage is one of those kind of sneaky secret coverages that a lot of people don't know about.
The loss assessment coverage.
Yeah, and in California, HOAs are so common, so it's a good coverage. And it's typically cheap. You can add like $50,000 in HOA coverage for like $10 a year or something. It's inexpensive to have on there. And there's different levels, so.
Okay.
Yeah.
Yeah, and that's also still good to know that your HOA does cover that.
Right.
It's nice to know to be like, okay, if someone gets messed up around here, like they're getting taken care of. It's not like we were like, oh, we're not paying for anybody. See you later.
Yeah. Well, they could cover it. As insurance agents, I can never say it is covered.
Gotcha.
I mean,
it's possible. There's a possibility.
Every situation is individually assessed.
From 0 to 99%, there's a possibility that this could happen. Maybe.
Each individual claim is assessed by the claims adjuster. I am not an adjuster. I'm just an agent.
Okay. Yeah, I'm not an attorney, a lawyer, a doctor. Okay. Hey, so now what's up with these bundles and why would somebody like want one or get one?
Want a bundle.
Why would you want to bundle this?
So a bundle is a term in the insurance industry as having multiple policies with the same company. So like if you have home insurance, if you just have home insurance with the insurance company and it's only home insurance, the price is higher than if you have home, than if you bundle your home, auto, life, umbrella, earthquake, business insurance.
Wait. Did you say earthquake?
Right. Yeah. Oh, earthquake insurance is not included in the home policy.
Who would have thought?
In California.
Really?
Yeah.
How about in Japan?
I don't know. Maybe.
Okay. I was just wondering, like, is it only in places?
I'm not licensed in Japan.
Okay, but is it only in places? Is it only in places where earthquakes happen, or because when you said only in California,
right? Well, I only know California because I'm only licensed in California, so I don't know about the other states and how they handle earthquake insurance.
Okay.
But in California, earthquake is excluded in your homeowner's policy.
So you have to have an earthquake policy.
You can either get an earthquake policy separately, or some companies have an endorsement that is basically just like an add-on that you can add on for additional premium
bundle
money.
it in.
Right.
Yeah.
Yeah. So if you bundle your home, auto, earthquake, every additional insurance policy that you add with the same company, typically they'll give you a discount for.
Okay.
So like, let's say you have home only and then you add auto insurance on with that company, then maybe they'll give you a 20% discount on your home. That's a big discount.
Wow.
Auto home discounts are big.
Okay.
Or you add an umbrella, they'll give you an additional 5% discount. So the more policies you have with a company, probably the better price that you're getting.
Cool.
That's
rate wise.
Rate wise, yeah. So that's why they bundle. All the commercials are like, bundle.
What's the biggest bundle? How much can we bundle?
Oh, I think it can go up to 50%. I mean, I don't want to talk about in each individual carriers, but like if you have let's say you have an auto home and that's 25%. You do the math. Ready? I'll talk. You do the math.
Okay, 25%.
25%.
25% of what? I don't even know what that means.
25% of your price. So if you have $100 and it's the home only, and you add in auto, then your price goes down to $75 just for adding in that discount.
Gotcha. Okay, cool.
It adds
the 25%
discount.
Cool.
Yeah. So if you have auto home, maybe that's a 25% discount. You add earthquake, that's another 5% discount. You add umbrella, 5% discount. Life insurance, another 5% discount. So they just
40%.
start stacking up.
Yeah.
Yeah.
Wow.
Yeah, it's really cool.
That is awesome.
Bundling.
Bundle it.
Yeah.
Bundle's gonna bundle. So because floods.
Oh, floods.
Is that a part of a bundle or is that in the home?
Right. So flood insurance has flood can be two different things because you can have a pipe burst in your wall and it floods your house. And that's typically covered under your home insurance.
Okay.
Sudden and accidental pipe burst is typically covered under a home insurance policy.
Yeah.
But rainwater is typically excluded. So, there's different scenarios where it could be covered, like when we talked about if the tree falls on a roof and it's raining. Well, if the wind blew over the tree and then it crashes in the roof, then maybe some rainwater.
Natural disasters?
Right.
Is that a policy that you bundle in?
So you can add flood insurance as a separate policy. So rainwater is flood, and that's typically excluded. So if there's a lot of rains and the water comes up through your front door or whatever, that's usually excluded.
Wow.
That's flood.
Okay.
But you can add flood insurance as a separate policy.
Yeah.
And some people are in a flood zone.
Sure.
And so their mortgage would require flood insurance as part of their mortgage.
Okay.
Yeah. But you'd have to be in a flood zone. And those, that's like FEMA. So,
Okay.
yeah.
Right. So then now if I have so we're bundled. We're all bundled up.
We're all bundled here.
And I drive my car through the garage door.
Right.
What policy does that go on?
Oh, right.
Because then we're talking about deductibles. Oh, well, the car did it.
Right.
So now we're only going to take out that $500 deduct instead of a $2,500 deduct. So it's like, where does that play? And if we do have that claim on the house, does our premium go up?
Yeah, that's a great question. Okay, so I don't know if you drive your own car into your own garage.
Just one of those nights.
Right. So let's just flip the script a little bit.
Okay.
If you drive your car into your buddy's garage,
Okay.
accidentally,
Yeah.
whoopsie, then your buddy's auto insurance covers the property damage that he did. Or she did.
okay.
It could be a guy or a girl. I guess it's not nice to say only
yeah,
guys
that's
drive
right.
through garage doors. But the auto insurance covers the property damage. So, like if you're in an auto accident and you hit somebody's house or somebody's tree, or that's all covered under your auto insurance.
Okay.
I mean, I guess it could be covered under home
of,
policy,
like, property
but
damage
yeah,
or whatever.
probably if the home insurance policy covered it, they would probably go and the insurance carrier would probably go and sue the person to try to get their money back.
Wow.
Yeah, that's something that home companies could do.
Okay.
They could cover it and then go back and sue the person who's liable, sue their insurance. What was the second part of the question?
The rates are the premium.
Oh, the premium.
Yeah.
That's a great
What's
question.
going on? Because we didn't know where that was coming from. Because we bundled our car
Right.
and our home, and then the car hit the house, and now where are we
Right.
pulling this policy from, and what premium is doing what?
Yeah.
So
it depends on what
what's the
policy
fallout?
pays out. So if your auto insurance paid the claim out, then your auto insurance rates will go up.
Okay.
But your auto insurance rates go up because you were in an at-fault accident, not just because you had a claim. So if you're in an at-fault accident, the at-fault accident is on your record, and that's what increases your rate, just like speeding tickets.
Oh,
But for home insurance, if you have a claim, your rates could also go up. They could go up for just having a claim. So that's why it's important to not put in small claims on your insurance, because even a small claim could increase your premium, 40% for 3 years.
gotcha. You might as well just replace a couple panels on your garage door.
Right.
Be done with it.
Right, because you
Okay.
don't want to end up paying more in insurance than you did than you got for the claim.
Yeah. Okay.
Yeah.
Cool.
Good question.
Yeah. Thank you.
Some companies have claims forgiveness. So like if you've been with them for 6 years, then they won't increase your premium if you had a claim. But every carrier is different. So you need to check with your own insurance
Okay.
advisor to find out.
So give us a rundown on who you are, what you do, right? Why someone would need someone like you to move forward, and then how they can get involved with you.
Right. Oh, that's a good question
You know
too.
what I mean? It's like,
Yeah.
just
Plug myself.
oh, for sure. It's a who, what, why, how script.
Who, what, why, how.
Yeah. Who, what,
All
why.
right.
Who are you? What do you do? Why would someone want to work with you? Or they need your services,
Right.
And then how can they get involved with that?
Right.
Yeah.
Okay, so my name's Jill Harris. I'm an insurance advisor in California. I'm licensed in all of California. My company is J. Harris Insurance Services. I do all insurance, home, auto, life, business. And they could contact me by going to my website, www.jharrisinsurance.com, or they can call me, 619-917-8164. They can email me, jill@jharrisinsurance.com. And then they can look me up on all sorts of...
Cool. So how does someone usually get in touch with you? Is it usually the agent that comes in and introduces you to the home that they just sold? Or is it people are like, hey, I need somebody, or does this come with, are you like in partnerships with different realtors around, so you just always have a constant flow of people coming into new houses?
Yeah, I mean, I think just referrals in general. I've done this for almost 14 years. I'm, very knowledgeable about what I do. And so I get a lot of referrals from real estate agents or lenders, or even customers that I have referring their friends. You can shop your insurance at any time. So I think that's like, a misconception. You don't have to wait for your renewal to shop your insurance.
Gotcha.
It's free to get an insurance quote. It's good to get it reviewed, and you can do it at any time. You don't need to wait for your renewal.
Cool. So what's the name of your company?
J. Harris Insurance Services.
So